We're going to switch over to another livestock sector, hogs, and which lots of similarities in the sense that maybe not as high in terms of record prices and so forth, but certainly another sector that is quite exposed to the United States in terms of exposure to the U.S. in terms of our exports of both live animals as well as meat. So what can we expect overall at the high level for hogs in the pork sector?
Yeah, so I do want to call out that I was not that accurate with the forecast last year for hogs.
Fair
enough.
Fair.
So,
Absolutely.
Things turned, we thought things were going to improve later in the year and they didn't. So last year was definitely a tough year. With that being said, we're seeing prices strengthen. So there's optimism this year. We've seen hog prices that are increasing. Feed costs are coming down, so that's going to support profitability. The one challenge from last year that's still looming over the industry this year is we saw a loss of processing capacity in Canada. So I think year over year, it was about 2% less processing capacity. So we ended up having to ship more of our hogs to the U.S. So actually, we exported about 10% more hogs last year than the year before because of that processing, or lack of processing. So when we look at this year, things are improving, but we still don't have that domestic processing. And so if you look at VCool, and this is something that is going to impact hogs as well. You can see on this figure coming up on the screen here, the level of our live hog exports that go to the U.S. as a percentage of our production. So we can see that things here are showing that where we're at now. And so, pre-mandatory country of origin labeling, we had a lot of hog exports to the U.S. We're seeing that's been declined. So we'll be watching this for sure. And the one thing to point out is that we rely so heavily on the U.S. for exports. We send about 1.5 million slaughter hogs to export in the U.S., and we send about 3 million piglets to get finished in the U.S. as well. So the U.S. is a very important market for Canada. And so, it's something we're mindful of. If VCool comes in and it does restrict that, we're going to see those prices potentially being reduced for Canadian hogs.
Yeah, absolutely. Again, the message is trade tensions, trade disruptions kind of introduce a difference between the U.S. price and the Canadian price, and that can be of concern. The one thing I'd point out as well is hog prices right now, if you look at the last 5 years, the nearby contract in the United States is at the highest level of the last 5 years. Now, if you look at the month of, or summer months where you would expect hog prices to be at the high of the cycle or the annual cycle, it's not yet in 25. The contracts for 25 are the highest of the next the last 5 years, but it is higher than what it was in 24. One thing to watch out is the cost, the feed cost, because we've been talking about a little bit about the raising price of corn, and that's something to monitor because part of the profitability towards, for those businesses that were able to get a profit margin that's positive and interesting in 24 was a result of lower feed costs. And if that's starting to go up because of what's the demand and so forth, that's something to watch out when it comes to profitability.